crude oil gets affected by a lot of data, from weather all the way to geopolitical tensions. We've seen recently what was happening in Iran with the Strait of Hormuz. If that closed down, it will greatly affect the price of oil.
We're probably thinking about futures as traders of CFDs. We're thinking about volatility of futures and the open interest for futures. So can you explain a little bit more about how that works?
Traders monitor closely money managers because it's their positions tend to move the market.
Like, imagine if I'm a totally new to this fundamental approach of trading crude oil, what are some of the sources that I can use to find out about open interest, to find out about the details of the commitment of traders? Hello and welcome back to another episode of Exness Trading Talks. Last time we looked at gross domestic product or GDP data, and this time we're going to be talking a little bit more about the data that influence crude oil and also how the price of crude oil influences other data and other markets. If you've not done so already, I would encourage you to subscribe, turn on notifications so you can always be aware when the new week's episode of Exness Trading Talks has been released. I'm Michael Stark, Financial Content Leader, and joining me to give his insights and his opinions and experience is Antreas Themistokleous, Trading Content Specialist. Welcome, Andreas.
Hello, Michael. Happy to be here.
Thanks for coming on. And when we talk about the data for crude oil, I think probably the main thing that we're all thinking about is the regular stock data, primarily from the EIA. So can you give us the overview of that? Like, what is the EIA's weekly crude stocks? How does it measure? How does it affect the price of oil and other things?
Okay, so the EIA is the Energy Information Administration, right? So we get that on a weekly basis, and it shows what the stockpile in the US looks like every week. So we have two cases. Either we have a lot of oil in storage or less, right? So in the first case, it's called a stock build. That means supply is more than the demand, so that's bearish for the price. When you get more supply than the market wants, price goes down. On the other hand, we have a stock draw. That's when we have less oil in the stockpile, and that means that demand is more than the supply, in which in that case we have the price going up. When you have higher demand but not enough supply to cover for that, that's when prices go up.
Okay, makes sense. And there are other points of data. I mean, we also have the API. We also have various other things like, Baker Hughes's rig count. But you would say that overall, EIAs is probably the most important of the regular weekly data.
Yeah.
Okay, right. That makes sense. And when we're thinking about other sources of potential data for crude oil, not so much like really economic data, we're probably thinking about futures as traders of CFDs.
Yeah.
So we're thinking about the volatility of futures and the open interest for futures, right?
Yep.
So can you explain a little bit more about how that works?
Yeah. So volatility is how fast and how far the price moves.
Yeah.
Crude oil especially is influenced by OPEC meetings, the weather, economic data, geopolitical tensions around the world, because they affect supply chain disruptions. We've seen recently what was happening in Iran with the Strait of Hormuz. If that closed down, it will greatly affect the price of oil because it will disrupt the supply chain, right? So high volatility offers big swings. It offers opportunity that comes along with risks. Whereas low volatility creates tight ranges and pushes the price to trade in a range-bound movement. So traders track implied volatility through options trading and also realized volatility through price history, right? So big spikes in implied volatility means that market is bracing for something big, like an OPEC meeting or geopolitical tensions coming up. So on the other hand, we have open interest. Open interest is how many contracts are open on the market.
Okay. So before we move on, just briefly want to go back to the regular data about oil, which is described in more detail in the article, which you can find in the description of this video. So if that's something that's interesting you, please by all means click on the link and read the article on Exness Insights. And also, not just for crude oil, but for all relevant markets, you can sign up to receive Exness's weekly report to learn more about what are the most important factors affecting oil and various other instruments right now, and what is the important factors upcoming that might influence the charts. You can find the link to sign up for Exness's weekly report in the description. So let's talk a little bit about the commitment of traders. So the commitment of traders, we have this report for pretty much every major financial instrument, right?
Yeah.
But arguably, for oil, it's more important compared to something like, I don't know, an average major Forex pair.
Yeah.
Right? So can you just talk about that in a bit more detail? Yeah.
Yeah, so the commitment of traders report is split into three major categories. You have money managers, which is the big hedge funds or large traders. Then you have producers and merchants, which is commercial hedgers. And then you have swap dealers, which is the banks and the over-the-counter hedgers. Now, traders monitor closely money managers because it's their positions tend to move the markets, so they monitor the positioning of money managers more closely because of the volatility that they create.
Okay, makes sense. And where would we go to find this information? Like, imagine if I'm not totally new trader, but I'm totally new to this fundamental approach of trading crude oil. What are some of the sources that I can use to find out about open interest, to find out about the details of the commitment of traders?
Yeah, for open interest, personally, I use the CME Group website, but you can also find this information on TradingView and Bloomberg terminals. For the EIA inventory, you can go online and check the EIA.org, which is the official website of the US that are releasing this data. And also for news feeds and market updates on what's happening, personally, I use Twitter or X for monitoring these news. You can follow accounts like Exness. Obviously, we post whenever we have any major news. Also the preview and the aftermath, so you get the whole picture of what's happening in the market. Crude oil included.
Okay. And when we think about regular economic data, things like inflation and so on, my impression is that the price of oil is essentially an input for inflation, because that has a strong impact on things like fuel and on various other raw materials, whereas inflation is one of the influences on the price of, for example, gold. What do you think about that? What do you think are some of the interactions between commodities in general, or crude oil specifically, and regular economic data, not specific to oil, I mean?
Yeah, so we have GDP data, especially the US and China, which when you get, for example, strong GDP data, that means you have more growth. More growth means higher energy use, therefore more demand for crude oil, for example, therefore pumping the price. Inflation is also one of them, where when you get high inflation, it can signal tighter monetary policy, which in that case, it can slow growth, right? So in that case, it crashes demand, so it's bearish for crude oil. And also PMIs, especially, again, China and US, where you get industrial expansion, for example, better PMI data, more industrial expansion, which in that case might be bullish. Whereas when you get contraction, remember, less than 50 basis points, then in that case might be bearish.
Okay, so that's definitely something to follow up on. And let's look at some charts. Or I mean, let's look at the chart of crude oil, of course. But I think specifically, let's look at it from the angle of, can you give us any particular examples of how these releases have affected the price in a fairly clear way, or in even the opposite, how a release has affected the price in an unexpected way? You know, like, how do you actually translate this into the practical use of the chart?
Okay, so if we check on the latest core inflation rate, let's say from the US, right, it was on the 15th of July. On that release, it exceeded expectations. Okay, now currently crude oil is not the ideal instrument to check big moves, because recently we have a range-bound movement, right? But on the 15th of July, we've seen the publication of the US core inflation rate, which came out higher than the previous. It was 2.8, came out 2.9, when in that case, crude oil pumped to the upside after finding some resistance on some technical indicators and then rebounded to the downside. So what I'm trying to say here is that you cannot just rely on a single piece of data to get an image of what's about to happen, because as we mentioned, crude oil gets affected by a lot of data, from weather all the way to geopolitical tensions. So it's a big range of catalysts that play their role in the price of crude oil. So, but currently it's in range-bound movement. We need some strong, new factor affecting crude oil to make some new assumptions, let's say.
And I think in terms of new scalpers around regular data, not crude oil specific, oil is probably one of the worst instruments to trade around then. Okay. So thanks very much, Andreas, for coming on. And for giving us your opinions.
Thank you very much, Michael.
And thank you to all of our viewers for watching, and we encourage you, please subscribe, turn on notifications so that you know immediately when next week's episode of Exness Trading Talks has been released, and we hope to see you there.